Welcome back, folks. How are you all? I believe everyone is cool. In this video, I'm not going to explain entry setup or anything. Instead of that, I'm interested to talk about the price action. So if you watch this video, I hope that you learn a lot from here and watch until the end. At the same time, if you are new to my channel, please don't forget to subscribe and also don't forget to give me a thumbs up. Here, this is the price action in Thursday. I told you beforehand that it's gonna be very difficult to trade because the reason is tomorrow is we have NFP around 8:30. So market will make both buy side liquidity and sell side liquidity for NFP. This is the end of the day, and let me show you the buy side liquidity and the sell side liquidity. Okay? Here, if you see, this is the 15-minute chart for Nasdaq, by the way. Market came lower, see this low and that low. What is this called? Shallow run. If you ever see this type of shallow run, mark the low as your sell side liquidity. This is your sell side liquidity. Where is your buy side liquidity? See this high and that high. They are now relatively equalized. But brother, this is not shallow run. Either way, this is your buy side liquidity. The reason is this is all-time high. If you see the all-time high, that's itself, it's the buy side liquidity. Okay, so market has the buy side liquidity. Market has made the sell side liquidity over here. This buy side and sell side liquidity is going to play tomorrow around 8:30 a.m. because of NFP. I'm not interested to explain how it's gonna trade in NFP. Instead of that, I'm gonna show you something from here to that leg, specifically that leg. I was in live today's morning session. I told that this inversion fair value gap is important and market should reach to this fair value gap. That means that was my bias. I was bearish. Whole day I was bearish. This fair value gap from 15-minute chart, keep that in your mind. At the same time, if you see, this was the order block. So market went for the first time, it went through this fair value gap, reached until this order block. At the same time, if you just mark the 50% of the order block, you will see that it has been rejected from the mean threshold of that order block. So over here, I'm going to mark the mean threshold of that order block. So this is the order block and the mean threshold of that order block. How exactly price reached over there to the 15-second last fair value gap? I have already shown that to my live. Here, this price action, I'm not interested. I'm gonna explain the PM session only because morning session I have already explained. I have already shown you the precision over here. Instead of that, I'm just interested to show you the precision from PM session. So I'm going to 1-minute chart now. This is my 1-minute chart and the PM session starts around 1 p.m. Okay, so let me mark the 1 p.m. and that is here. So this is 1 p.m. The PM session has started from there. Okay, keep that in your mind. This is the starting of the PM session. Let me change the color actually. Yeah, here. This is the starting of the PM session. Here there was a setup, but this setup I have just outlined to my Twitter. I'm not gonna talk about this. Instead of that, I will talk about over here. When market reached around that area, around the PM's lunch hour, what market has done? See this low and that low. Can you see it as sell side liquidity? Mark that as your sell side liquidity. So I'm going to mark it as my sell side liquidity. Okay. So this was my sell side liquidity. If you go to a 15-minute chart, you will see the same thing from 15-minute chart. A very nice sell side liquidity from 15-minute chart as well. From 1-minute chart also, this is the sell side liquidity. When market is inside that PM session, market first reached to this 15-minute fair value gap. There was the only fair value gap from 15-minute chart, and that is that fair value gap. Now, I would love to talk about here. When first market fall around the AM session, market fall nicely, reached until that area. When market reached until that area, where is your last fair value gap? Or the fair value gap has built over here. This is the only fair value gap. You can see this is the bullish last fair value gap, right? This fair value gap. That means this fair value gap should respect the price. Price should respect that fair value gap and then go for the all-time high. But market didn't do that. Instead of that, it reversed from this inversion fair value gap. Why this run went around that area? go to your 15-second chart, you will get the precision why it fall from there. Okay, so I'm going to mark this one and I'm going to extend it to my right. This is called the inversion fair value gap. This high failed to take that high. This high failed to take that high. This is going to be my inversion fair value gap. In this type of situation, I really don't want to see market will go above the constant encroachment of that inversion fair value gap. But as tomorrow we have the NFP, so I'm not interested to see the precision over here. You can see market perfectly go back again until the order block, also the 15-minute last 15-second last fair value gap, then market fall. Came here, come back again to the constant encroachment of that inversion fair value gap, fall again. I have already shown you everything over there. Market first went through, come here, tap to this bullish fair value gap, went little higher, then go through this fair value gap, come back again to this fair value gap, fall. When market fall here, that was my obvious liquidity. Market finally has taken that obvious liquidity. After taking this obvious liquidity, around after the lunch hour, around 12:50 macro, market gave another setup over here, trade the fair value gap, went for this relatively equal highs. See this high, that high, that high, all of them are relatively equal highs. Market went for that relatively equal highs. Finally, market reached one more time until the inversion fair value gap below. Here, I'm just not going to frame my trade from inversion fair value gap. Now, you can ask, why, brother, why inversion fair value gap? Why not 15-minute fair value gap? This is your 15-minute fair value gap. At the same time, when market went higher, why I marked that inversion fair value gap? Look at the price action over here from 1 minute chart. Can you see any last fair value gap from 1 minute chart? No, you can't see that. Instead of that, I would love to mark that volume imbalance. I marked that also at the morning session. Please watch that live stream if you want more precision. Okay, that is the volume imbalance over here. I marked that volume imbalance, that order block, fall, how beautifully it went over there. Okay, as I don't have any last fair value gap from 1 minute chart, I can mark that volume imbalance, but it is the weakest PD array of ICT's concept. So you can see market trade that volume imbalance one more time, tapped to the inversion fair value gap low, then fall. When it has fall, give you the market structure shift. This is your market structure shift over here. This low, when shifted over here, it's not your market structure shift, but this low, when shifted over here, then you got your market structure shift. When you got your market, let me mark it actually. There, you got your market structure shift over there. See, it has taken all the buy side liquidity, has taken, tap to the inversion fair value gap low. Why you are framing sell setup? You have this clean sell side liquidity. See this low and that low, they're relatively equal lows. You have the bearish bias, and you know from hourly chart market should reach over there. So your expectation is market should reach to that hourly fair value gap. So you should look for sell setup. At the same time, you have this 15-minute liquidity and 1 minute sell side liquidity. So you should frame your trade. Market sell trade actually. So market went higher, take all of the liquidity, 1 minute obvious liquidity, take this liquidity as well, tap to this inversion fair value gap low, volume balance has been traded, gave you the market structure shift. After giving you the market structure shift, where is your entry fair value gap? Let me mark the entry fair value gap. So this is your entry fair value gap. Okay, let me mark that entry fair value gap. Where is your last fair value gap? This is your last fair value gap over there. Okay, let me change the color. I'm going to remove this 15-minute fair value gap because I don't have any importance of this fair value gap, because you saw I didn't frame my trade from 1 minute inversion fair value gap or volume balance or anything. I am framing my trade from 15-minute bearish fair value gap, only fair value gap. There is no other fair value gap from 15-minute chart. So I'm not just framing from lower time frame, I'm also framing my trade from higher time frame. This is my last fair value gap. So breakaway gap. Okay, market should not close above the constant encroachment of that breakaway gap. That is the rules. But sometimes you will see the fake breakout. It's very rare though. But still, this bearish fair value gap hold the price perfectly. went through this, come back one more time over here. See this, this run is overzealous run. Okay, this happened because tomorrow we had the NFP. Most of the time you won't get this run. Whatever, perfectly come back again to this entry fair value gap, then boom, where did it reach? To that sell side liquidity. Has taken that 15-minute sell side liquidity or 1-minute sell side liquidity. Both of them has been taken over here. This low when shifted over there, you can say, brother, I got my market structure shift over here. Let me mark it actually. There, this is my market structure shift, and then market trade that fair value gap. So I'm gonna take my entry over there. No, you can't do that. This is not market structure shift. Market structure shift is over here. So you have to wait for the market structure shift. When you will get the market structure shift, then you will look for the entry fair value gap. In this type of situation, your entry will be here. You will cover the breakaway gap, just one tick above the breakaway gap, 1 or 2 tick above the breakaway gap. This is called precision. And then over here, this is going to be your trade. From 1-minute chart, if you find any relatively equal lows or something, then you can take some partial over there. If you don't get it, maybe you can close. You don't need to hold that trade for until that 43 handle, but it reached over there. So you please manage your trade the way you want to manage. This is the trade from 1-minute chart. Though I told you that I'm not interested to show you the entry setup. I have already shown that to you. Whatever. Let's go to 15-second chart now. I would love to talk about the 15-second chart now. Now I'm in 15-second chart. Why 15-second chart? In a consolidated day, trust me, the sub 1-minute chart is much more reliable than the 1-minute chart. It's much more reliable. Okay. First, let me remind you about this inversion fair value gap. Remember, market has made the inversion fair value gap, tapped to this inversion fair value gap, went higher, then went through this inversion fair value gap, come back again to this inversion fair value gap, fall. Now, what happened over here? Let's see. Around that area, okay. Market was going higher. Finally, it reached to that 1-minute inversion fair value gap around that area, right? When market reached around that area, exactly over there, it has taken all the high, failed to take the extreme high. This is now the extreme high, or you can see above the, or maybe this one. Okay, that means it failed to take some kind of extreme high. So there you will start to look for your inversion fair value gap. I'm going to remove this breakaway gap from 1-minute chart now. When market went higher, this run has given me this inversion fair value gap, the last fair value gap from there. Here, I'm going to keep it on my right around that area, until that area. Okay? When market go through the, come here, tap to this inversion fair value gap, went higher again. Brother, it went little high, outside of this fair value gap. Yeah, I can see it. It went little outside of this inversion fair value gap, but just still this inversion fair value gap, tap to this bullish fair value gap, went higher. Remember from 1-minute chart, tap to this bullish fair value gap, went higher. So history repeats. Did the same thing, marked it to your right, tap to this inversion fair value gap one time, come back again to this inversion fair value gap another time. See, the body is closed around the consequent encroachment of that inversion fair value gap. Tapped over there, fall. Now, from 15-second chart, where should be your entry? Market went higher, exactly to that area. It perfectly traded the inversion fair value gap from 1-minute chart, then fall. Did you get any market structure shift over here? Is that valid for shifting market structure? This low? No, it's not valid. This low? No, not valid. This is my market structure shift, not valid. This one, it's still not valid. Why? Because from here to here, I'm not gonna count it from as a market structure shift. Market structure shift should have been placed very soon. Very near to the market, very near to the swing low or swing high. So it takes too long to shift the market. So I'm not gonna use this one as my market structure shift. Instead of that, I will say this is liquidity taken, this low and that low. from 1 minute chart, this is market structure shift. I'm just talking about the 15-second chart. In my opinion, this is liquidity taken. This low and that low, they are relatively equal lows. Market has taken the liquidity, went higher one more time. Market just reached until that area. Take the buy side liquidity again. Now, you are looking for sell because you know your bias is bearish. It has taken this buy side liquidity around that area again. This is your buy side liquidity taken, okay? At the same time, here is your breakaway gap from 1 minute chart. That means 1 minute last fair value gap. Remember, there is your 1 minute last fair value gap. After taking the buy side liquidity around that area, traded the inversion fair value gap from 15-second chart, gave you the market structure shift here. This swing low is valid for shifting market structure. Why? Because this low has traded this fair value gap. So you got your market structure shift over there. Market fall. Where is your first fair value gap or the entry fair value gap, and where is your last fair value gap? Let me remove this one. This was the entry fair value gap from 1 minute chart. Remember, this was the entry fair value gap. So when you got your market structure shift, where is your first fair value gap or the entry fair value gap? There is your entry fair value gap. Where is your last fair value gap or the breakaway gap? There is your last fair value gap or the breakaway gap. Okay. You are going to take your entry when market tap to this entry fair value gap over there. Then you should cover the breakaway gap, maybe little above the breakaway gap. Where should be your target? Are you going to target these lows? No, you are not going to do that. Instead of that, look for some kind of relatively equal lows from 1 minute chart. Now you can see this low and that low. They are relatively equal lows. And let me actually mark it from here to here. This is your relatively equal lows. Your target should be there. Maybe you just go to the obvious liquidity until that area. So over here, but brother, it is 1:1. I just can't do that. Okay. In that type of situation, look for another relatively equal lows from 30-second chart. See this low and that low. Look over here. These two low. Are they relatively equal lows? Absolutely. Mark them. Hold your trade until that area. Take a partial over there. When market will reach over here, take the partial, your first partial or whatever. You take the partial over there. Don't hold it until that area without taking the partial. At the same time, look at the time. What is the time? This is the macro. 150 to 210 macro. Around this area, this is the just 2 candle. Okay, 2 p.m. After that, boom. Here, I would love to show you something else. When market went higher, you can say, brother, you are looking for the inversion fair value gap. Why you are not looking for the inversion fair value gap over here? Yeah, I would love to mark the inversion fair value gap as well. When this low has taken over here but failed to take that high. See, this is the extreme high. It failed to take that high. So the last fair value gap, I'm going to mark the last fair value gap from that line. So here, this is my last fair value gap. Okay. Which is actually the inversion fair value gap. Market tapped to that inversion fair value gap, went through this inversion fair value gap, tapped to the inversion fair value gap, boom, market went lower. Why market didn't reach to that fair value gap next time? Let me check. Actually, no, it didn't reach until that area. Instead of that, it reached here until that entry fair value gap from 30-second chart. It reached to that entry fair value gap until here. Okay, so yeah, it didn't reach until that area because market was just traded that entry fair value gap from 30-second chart, 15-second chart, then market fall. But that was the inversion fair value gap. Now over here, I'm not interested to mark that as my inversion fair value gap. Instead of that, I would love to go for the first fair value gap. Do you remember the law of the first fair value gap? It has to take the swing high and it has to fail to take the highest swing high, which has traded the 1 minute last fair value gap of 30-second last fair value gap. So this is that. Market has taken the swing high over here, and failed to take the extreme high. The first fair value gap should turn into your entry point over there. Took your entry from there, cover the weak constant encroachment. Just maybe one tick above that weak constant, or if you just put it over the 3 handle, it's not bad. Target the entry fair value gap. Now that entry fair value gap over here is too near, so I'm not able to target the entry fair value gap. Instead of that, I will just go for the relatively equal lows. 1:4.44777. I am trying to show you the precision from the lower time frame, how market tapped in a certain level tick by tick, always tick by tick, tapped over there to that inversion fair value gap, fall, traded two time to that inversion fair value gap. What else do I see over here? Do I have anything else? High, low, higher high. The lowest down close candle is my breaker. Why this one is breaker? Because market has filled the unfilled area. The high of that breaker block, and there. I'm going to remove this inversion fair value gap now. This one now. Every line over here now. This breaker block tap to the constant encroachment of that, mean threshold of that breaker block, tick by tick, fall again. Market came lower, take that relatively equal lows around that area. This area, why this run happened? Trust me, this is just for NFP. And we actually got stopped out in that type of situation by that type of run. It's not precise. Still, market tried to manipulate us. Still, we are able to frame our trade in this type of situation from a very lower time frame. So if you have watched ICT's video, he has actually take a sell from that inversion fair value gap. I guess it was from here. Just let me mark it. What was that? Here, I guess. Yeah. He actually framed a trade from that inversion fair value gap over there. Why that one is inversion fair value gap? Now, this high failed to take the extreme high. I guess, I don't know, it's not looking so beautiful inversion fair value gap to me. But if I took the entry from that inversion fair value gap, obviously it is important, I guess. Okay, but still, he was looking for sell. I was also looking for sell in the morning session. Here, if you watch the PM session price action, you had a lot of chances to take entries even if in these NFP days. But you should not trade around this area because it's highly risky. You have to mark all the levels beforehand. You have to be 100% sure about your bias. Then only then you will be able to trade in this type of situation. My advice is not to trade in NFP days. Instead of that, see the price action, how beautifully it reacts some kind of specific level and how beautifully it falls. If you are able to catch them, understand them, you will be easily trade. You can trade any days, anytime. If you want, anytime, you will be able to trade. I don't know, is it little insightful for you or not? If it is insightful for you, don't forget to let me know to the comment box, and don't forget to give me the thumbs up as well. So until the next video, cheers guys.